You were listening to chartingwealth.com for Friday the 15th of April, 2016. What do we see going on? Well, we're paying attention to the charts, not to the noise. By noise, we mean the media noise. We mean anything that takes you off what's really going on in the market. The charts are our best way, our best, most fundamental way to see what's really going on. Those of you who are value investors, well, wait a minute, I just care about what the company's really worth. Well, who the heck wants to buy high and sell low? You want to buy at the right time. You want to buy low and sell high, or buy high and sell even higher. What we're trying to do on a daily basis is to see what's going on in the markets, to follow the charts and make the right decisions for investing or trading. And the way we do that is we open up a virtual account at any of the online brokerage houses. You can do it in a matter of minutes, and then you fund that virtual account with $1 million of virtual money. Then you start practicing and seeing how good a trader and or investor you are. Now, we are starting first, as we always do, with IYY, which is the iShares Dow Jones U.S. Total Market Index Fund. It's an ETF, an exchange-traded fund. We're redrawing our trend line as we speak. What do we have going on? Well, we are looking first at our two-day chart, and we see on our two-day chart that we've seen a little increase in the derivative oscillator. It was going down to about 0, and then that was on the 12th, and then on the 14th, the two-day candle on the 14th, we see it taking off and racing up, and we see that the MACD has pulled away from the signal line. It was getting very close back on the 12th to crossing. It's moved away a little bit, still awfully close for comfort, but we've seen a green open box candle continue to move up. We use the Hinken Ashi type of candlesticks. They're different than your typical candles. Want to know more about it? Go to Charting Wealth or just look it up on Investopedia. Hinken, H-E-I-K-E-N, Ashi, A-S-H-I. It's a different way of charting candlesticks. I like it a lot better. It's just more effective for what I do. I encourage you to experiment around, give it a try. If you don't have our charting layout, you ought to. Go sign up for our newsletter at Charting Wealth. You'll get it for free. Now, to continue on, we do see a nice size up move candle, about the same size as the candle back on the 31st of March, right before we jumped into the new month of April. We see the market moving up again. If we look intraday, and again, this is the total market, on the 4-hour chart, what do we see? Well, we saw a crossover back on the 13th. Those of you who jumped in that morning have seen a nice continued run up. We have the market closing up again. It was more of a sideways move than anything. It is up for the day 0.02%, 0.02%. We do have a building derivative oscillator, and we also have the MACD moving away from the signal line on the short chart. So again, we always look for a rollback, which we had starting on the 5th of April all the way through the 12th, and then on the 13th we had it move back over on the short chart to the same direction as the big chart. Remember, the big chart controls, and when you have that occur, that is a signal to look at getting into the market in one of your virtual trades. Now let's move on to the S&P 500 as depicted by SPY, the Spiders S&P 500 Trust Series Exchange Traded Fund. What do we see going on? It looks quite similar, although not exactly the same as the total market. Sometimes people say, why is this more similar to the total market than something like the Qs that we'll look at next? Well, the reason is because the S&P 500 is a large amount of the volume in the total market. It's 500 big companies, and we see looks somewhat similar. Derivative oscillators not heated up quite as much as it did on the IYY, the total market. We have the MACD moving away from the signal line. We have a nice green up open box candle. Now, if we look intraday, we're going to see a chart setting up similar to what we saw with the total market, crossed over on the 13th, moving up after a rollback. good point getting in sometime the morning of the 13th, and it's continued to move up since then. Actually, for the day, the S&P 500 was neutral. It was not up. It was not down. Our Henkinashi show you that the market was continuing to build, but as far as where it closed out for the day, it wasn't up, it wasn't down, 0.00%. So that's where we are on the S&P 500. Now let's go back to our 2-day chart, and we're going to check out the Qs. What is the Qs? That's the Nasdaq 100. And as it loads up, we see that it never crossed through the 2-day trend line. In fact, we've not redrawn the 2-day trend line for about 2 trading weeks. We're going into the 5th. This is the 5th candle. So we've continued to see the market stay above the 2-day trend line as far as the Qs goes. It crossed over going up on the 2-day chart way back on the 18th of February and has continued to move up since then. We have a nice, good trend line. We see a diverging between the signal line and the MACD, and the derivative oscillator is considerably stronger than the derivative oscillator on the total market, the S&P 500. Let's look intraday, see what we see. The 4-hour chart shows us it crossed over on the 13th going up. And we had some down movement on the 14th in the morning and then up movement in the afternoon. For the record, the Qs was up 0.01% for the day. One thing I always pay attention to is we see the Qs has topped out over the last really 2 full days at about the same point, somewhere around 111.11, so $111.11. That is something I always pay attention to when you start seeing a topping out. That, again, doesn't mean that it can't keep going up, but it's well above the Bollinger Bands, and that is always a problem, as we talked about on yesterday's program. Bollinger Bands are like air for the stock to move, the equity, whatever it might be. When you're above the Bollinger Bands, they're volatility bands. You're above. You really don't have any oxygen outside them, and you tend always to move back into them. So we've continued to see movement outside the Bollinger Bands. They will stretch to accommodate that movement, but at the same time, I look at it like there's no oxygen. It's like outer space. So continue to pay attention to that. We do see the derivative oscillators continue to gain energy, and again, the MACD on the short chart is moving away from the signal line. So just be aware. We're getting long in the tooth, I'll tell you, on all of these moves. If those of you who listen to us every day heard what I spoke about yesterday, what did we talk about? We talked about looking at your Stock Trader's Almanac for 2016 for the month of April. See what Yale and Jeff Hirsch have to tell you about what typically happens in mid-April. So please pay attention. Realize these moves are long in the tooth for the total market, for the S&P 500, and for the Nasdaq 100. Okay, let's lastly go to gold. Gold was down 1.4% for the day. Gold is in a confirmed down move on our 2-day chart since the 15th of March. Has continued to, well, again, it moved down for a while, then it ticked up. It's still in a confirmed down move, but what we're paying attention to, remember, we're looking for rollbacks, right, before we jump in. Well, we saw that rollback start on the 5th of March. It continued. Then we started seeing red down candles forming on the 13th. Had enough of a down movement during the course of the day on the 14th to pop through the magic signal line on the MACD, and at the same time, something we like to see, we saw the derivative oscillator go negative. So when you have a crossing in a direction, you like to see the MACD and the derivative oscillator cross at the same time. Makes you feel a lot better, tends to improve the likelihood of that down movement, you getting into it being a correct move. And again, all the things we talk about, we ask you to experiment with. We are not giving trading advice. We are giving advice for you to train. It's not trading advice, it's training lessons. We want you to practice and get used to it on your own. I was writing in the new book we're getting ready to put out in the near future on Occam's razor today. What is Occam's razor? Well, it is the principle of simplicity. It says that you want to do things, you want to keep your decision-making process as simple as possible. But as Einstein said, make it as simple as possible, but not simpler. So we're trying to make our decision process a smart one, an efficient one, a clean one, but it has to be a good one. And I encourage you to experiment, play around. The only way you're going to make this work, my friends, is for you to do a little bit every day. 10 minutes, 10 minutes, day in, day out. We'll continue to keep you posted on what's going on in the markets. If you hadn't already signed up for and aren't already receiving our How to Read a Stock Chart video, our daily podcast, our layout that we have at Free Stock Charts, all you got to do is go to chartingwealth.com and sign up. If you want to help us out, we ask you to do one thing. Go to iTunes. Sign up for, subscribe to our podcast. We have both a weekly separate podcast now, a video podcast, but the real one, the big one, is sign up for our daily podcast. Sign up for both. But would you please, on the daily podcast in particular, go on there. Say something nice about us. Give us a 5-star rating. It means so much to us. We really appreciate it. It's about all we ask for. Thank you so much. God bless you. Wish you the best in your trading and investing. That is, in learning how to do this. It's the most important thing you can learn about the market.